Hey everyone, and welcome to this explainer. I'm absolutely thrilled you're tuning in today because we're going to dive into a seriously fascinating transformation happening right now in the world of accounting and assurance. Whether you're gearing up for your ACCA, AA exams, or, you're just super curious about how modern financial detectives actually operate out in the field, consider this your ultimate guide to modern audit evidence collection. We're going to break down exactly how today's auditors are ditching the dusty paper trails and leveraging cutting-edge tech to hunt down anomalies. Let's get into it. So picture this. You're a detective, and you're trying to find one single tiny clue inside a massive pitch-black warehouse. Back in the day, auditors basically had a little pocket flashlight. They could only illuminate a tiny corner of that warehouse at a time, just kind of crossing their fingers and hoping they were looking in the right spot. But nowadays, financial data sets are absolute mountains. We're talking millions of transactions per minute. You literally cannot just use a flashlight anymore. You've got to flip the switch and turn on a massive digital floodlight. And honestly, that is exactly what the modern digital audit is all about. Okay, let's dive into this roadmap. First, we'll explore the audit evidence evolution. Second, traditional methods versus ATT. Third, the auditor's tech stack. And finally, uncovering related parties. Starting off with Section 1, the audit evidence evolution. Now, at its core, an auditor's main gig has always been about gathering rock-solid, undeniable evidence to back up their conclusions, right? But before the digital revolution kicked in, gathering all that proof was incredibly manual. Traditional testing relied heavily on physical substantive procedures. Think inspecting actual paper invoices, vouching them manually back to a ledger, and literally recalculating the math by hand. It also leaned on indirect tests of controls, which basically meant observing a process or spot-checking a sample of documents just to see if a physical signature was there. It was so labor-intensive, and honestly, with sheer mountains of paper, there was always this looming risk that something absolutely crucial was going to slip through the cracks. Moving right along to Section 2, traditional methods versus ATT. To really wrap our heads around this massive shift, we've got to firmly grasp this concept: automated tools and techniques, or ATT for short. And look, this isn't just some fancy tech buzzword. It's practically the foundation of modern auditing. ATT refers to the specific digital software and analytics platforms used to perform audit procedures. So instead of going to a client and asking for a printed sample of 50 random invoices, the modern auditor uses ATT to plug directly into the client's system, interrogate the raw data, and gather evidence instantaneously. It's a total game changer. Now, what's really interesting here is the stark contrast between these two approaches. It's practically night and day. On one hand, you have the traditional route, manual sampling, relying heavily on indirect controls and dealing with a super limited scope, mostly because humans just physically can't read a million invoices in an afternoon. But then you look at the modern era, which is all about automated tools, direct data interrogation, and broad analytics. Today's auditor isn't just sitting there checking the math. They're analyzing the entire financial ecosystem at once. They're spotting trends, outliers, and complex patterns that a human eye would literally never catch staring at a spreadsheet. All right, Section 3, the auditor's tech stack. Let's break down the actual digital toolkit auditors are deploying out in the wild today. First up, you've got dedicated audit software, which is specifically designed to extract, sort, and filter massive, clunky client databases. Then there's test data. This is actually super cool. Auditors will literally feed dummy data into the system, effectively trying to break or trick the client's software just to prove whether the internal controls actually hold up under pressure. And finally, you have data analytics tools. These platforms take all that raw, messy data and instantly turn it into clean, visual dashboards, so auditors can spot structural anomalies in seconds. When you really map out this transition, the shift in how we approach evidence is just staggering. Take the testing scope, for example. Traditionally, time constraints meant you had to settle for a small, sample-based approach. Finding an error was mostly a manual review process, meaning you only caught something if you were lucky enough to pull the exact right sample. But with modern ATT, your scope explodes to the full population. Instead of you hunting for the needle in the haystack, algorithmic flagging acts like a giant magnet, just pulling the needle right out for you automatically. So the crucial point to take away here is the sheer scale of this testing. We are talking 100%. By leveraging these modern data analytics tools and audit software, an auditor can very often test 100% of the transactions in a specific account balance. Not a 5% sample, not 10%, the entire population. This completely revolutionizes the level of assurance an auditor can provide, and frankly, it drastically reduces audit risk across the board. Which brings us to our final section, Section 4, Uncovering Related Parties. We are going to put our tech stack to the ultimate test with one of the absolute trickiest, highest-risk challenges in accounting. As the source material makes super clear, identifying unrecorded related party transactions is uniquely difficult. And why is that? Well, because these are inside jobs, transactions conducted between the company and its insiders, like directors, major shareholders, or even their family members. If management actively wants to hide these deals, the paperwork is going to look perfectly normal. A traditional manual sample will almost always miss these hidden connections. You absolutely need sophisticated digital testing to see that invisible web. And this brilliantly illustrates exactly how our automated toolkit cracks the case. Step 1, the auditor deploys their software to sweep the entirety of the ledgers. Step 2, data analytics jump in to spot the anomalies. Say, a sudden, weird spike in payments to some unknown vendor right before year-end. Step 3, the software automatically cross-references these anomalies against external databases, suddenly revealing that, hey, this unknown vendor shares a registered home address with the CEO. Finally, Step 4, the auditor extracts direct, undeniable evidence. The software connected the dots that a human just couldn't see. So, all of this leads us to a really fascinating, kind of provocative realization. If automated tools and techniques are handling all this incredible heavy lifting, testing 100% of populations, running algorithmic flagging, untangling hidden entities, what exactly is the ultimate value of the human auditor? Well, the machine is amazing at flagging the anomaly, but it still takes a highly trained, insightful human mind to investigate the context, properly interrogate management, and figure out the real story behind the numbers. But as these algorithms keep getting smarter and more autonomous, will the role of the financial detective evolve even further, or will the tech eventually outpace the human entirely? Definitely something to think about. Thank you so much for hanging out with me for this explainer. Keep learning, and I'll see you next time.